Hi there. Okay, we're at video number 56 overall, but number video 18 of module 3, and we're going to switch it up a little bit here. Okay, and we're going to be using two different indicators this time together, and we're going to be mainly focusing on the ADX. Alright, now the reason why I'm focusing mainly on the ADX is because it's very powerful indicator, and more people should be using it. Alright, now with this indicator here, you might be familiar with it. Alright, is the Alligator. Now, to be honest, you could actually use this Alligator in replacement of the moving averages, or vice versa. You could actually go ahead and place some moving averages on there. Alright, because essentially that's what these are. Let's go ahead to the indicators list, go to the Alligator, and you can see that it's using a simple moving average set to 13, 8 and 5, and it's essentially just moved them back from the chart a little bit at different intervals, and then when they start to cross, that's when you go long or short and what have you. Alright, so that's all that's really that it's doing. It's just one indicator that allows you to control more than one moving average, and you can apply the shifts to them and set them to high, close, low, medium price, typical price, linear weighted and stuff like that. Alright, so it's essentially just like the moving averages. Alright, so let's go ahead and take our first rule. Alright, let's get right into it, because I'm hoping now that, you know, with the amount of videos that you've watched from the start till now, will give you some good indication of what we're actually trying to do here. Alright, so the ADX. Now, the Adx line, the way this just basically works, and the way that I use it, is I essentially look for the black line, which is the ADX. Now, I'm going to right click, choose my indicators list, and show you the average directional movement index, and this is what the parameters look like. Okay, now they're completely a different color by default. If you click on the reset button, all the colors are going to change. So depending on the color of your background and what have you, this will be your ADX line, which is this one here, and that's a representation of the strength, alright, of how much power that's really in that behind that that momentum, that market sentiment. Okay, then here you got your colors. You got your positive DI, which is your positive directional index, and then you have your negative directional index, which I've colored in red. Okay, I've chose the second color here, not just for everyone's ease, but for ease of viewing. But I find it a lot better to actually put it on a darker thickness right there to help me spot out these signals a little bit better. Alright, so okay, so what I'm looking for essentially, okay, is to see when this black line breaks above the 30 line. You can see I've got a 30 level in there. Alright, and that 30 level is basically my trigger. Alright, and so anytime that this black line breaks above it, I'm looking to go long or short. So the next thing I need to be looking at is this one here. Now this green line is the positive directional index, and anything that's positive goes up. Okay, so this is an indication to let me know that we are in a potential buy trade or a potential buying area. Alright, but before jumping in too quickly, let me just zoom in a little bit. Before we jump in too quickly, rather than acting when this black line penetrates that 30 level, I'm looking for also this green line as well to break, and then that would be my first. So my black one would be the first thing I'm going to be looking at, and once that meets that requirement of a break of the 30, then that's great. Then the next thing I'm going to look at is the directional index, and this one is the positive, so it does break above, and that's the second one. Okay, so it actually does it right there. The next thing I want to look at is that are the bars, this is a really simple rule guys, are the bars above this cluster? Alright, and if it is, I will go long on the next bar only if I'm on a support line or I'm very far away from a resistance line. Now, is that a support? We may ask ourselves. Alright, so let's go ahead and take a look. Alright, let's just show you basically where the Adx line was. So there's my first line. That's almost bang on perfect, but that would do for the time being. And then I'm looking for the green line, so it's right there. So then I want to look to go long on the next bar, and I'm also looking at this green bar is above these three lines, so that's good. So let's go back over here, and where does the buy signal appear? Well, the buy signal actually appears right here. Okay, yes, it is a resistance level, and we don't necessarily want to go short here because we are in a buy trade. And you might say, well, hey Loz, we don't want to buy into resistance levels. That's very true. So what we would possibly do is we could either check back a little bit further back to see if most of the prices actually remain below this level, or to see if we've got some prices that are actually above it, to see if there is kind of support being developed, and it goes back up. Alright, and there are no breaks below that line. Alright, if that there is quite a lot of if there's a lot of market price below this resistance level going back all the way over here, then I would basically would look for a breakout. Alright, I'd wait for a little while and then see what happens. We can see that this bar does break that line. Then we would need a confirmation. This confirmation is not really a confirmation. It's still got a red candle, but the main overall market sentiment, again, this is when we get into candle analysis, is, I'm actually cheating here in this video because we haven't really got to candle analysis, but we can see there is quite a fair amount of market sentiment behind these, and these are just continuation candles. I call them step candles or continuation candles. Alright, and then eventually you'll see some more market sentiment coming in. Alright, so let's just go ahead and take a look to see if this one actually rings off true. Alright, here is what I was talking about. Now this is just a coincidence, guys. I didn't actually look at this before my videos. Actually, I don't pre-plan my videos. I actually do them all on the fly. Alright, so here we can see that we did actually bounce off quite a few times, and this was actually a very strong support. Alright, let's keep going back. Here again, we can see there was some strong sentiment there. We did try to break below it, but then this support line kicked in, and then it broke through that, which is now resistance, broke through that resistance and turned it into a support again. So I'm pretty happy that this line that we drew in, okay, is good enough to actually go in for a long trade. Now you can notice that I went back a fair old bit there to try and work out if this line is a true line. Alright, if you've kind of like a little bit confused what I mentioned, you see how these the market price is actually below this line. If a majority of the time that the market was always below it, then yes, I would regard that as a resistance level. But if the most of the market price, when I was looking back to my left, was above it, then I'm going to look at this as more of a support level than a resistance. Alright, it's when you see patterns that are showing more occurrences than not, then that's what you need to go for. It's like a voting polling station. The more that vote yes, obviously you're going to go with the yes. Okay, so that's how I look at it. Alright, so that's for that particular buy trade right there. Alright, and what we basically looked for, and let me just recap before we move on, is I'm looking for this black line to break the 30. Then the next thing I'm looking for is the positive directional index to break the 30, seeing where it basically breaks, then taking a look to see if we're on a support or resistance. Alright, let's see if this keeps on ringing through true. Alright, okay, so here we've got the first break, which is around about here, and then we've got our confirmation around about here, and then we will go long. Should we go long around about there? Well, we need to take a look, to see if this is a support or resistance level. I'm not going to look in this video, but I'm just going to give you that that notion right there. Okay, so here we go. Right here, we've got a sell opportunity, and we've got the ADX that breaks right there, and it does it right here. Okay, and then we're looking for this break. Well, this one's actually broken above already, so that's perfectly fine. Then I'm waiting for this black line. Alright, and we can see that it's actually below the cluster of these lines, so that will be a good short trade. Alright, there's a no trade because the black line didn't go above. Here is a short trade opportunity. These essentially go above at the same time. You could very well wait here, or you could have got in around about there. I mean, there is a bit of a resistance line, support line there anyway, so that's pretty cool. Then we need to look back over here for our TP targets, or if there are any supports or resistance levels, okay, and so forth and so on, to try and predict where we're going to place our TPs. Alright, the black line went above, the red line went above, and plus we're below those as well, so that's cool. Alright, so that's how pretty straightforward it is. Alright, here is another one right here with the black line breaks, and then we got this one right here. Then we need to take a look where this comes in. Does it have, is there much potential for it to come back down? Well, I don't know until we look over to the left. Alright, and we could have got in around about, I think it would have been around about there, to be honest, on the next bar, and that's where that red line broke, and that's where the black line broke. Okay, and that does look like a support line. Alright, that's a support line, so it hasn't really broke one way or the other. This one, I think, is kind of pretty fortunate that it kept on coming down, but we do seem to have hit some major highs there for the market to come down a fair old bit for it to retrace. I know that much. So yeah, just play around with those, and with good money management and risk management, you should be okay. Don't go in big all the time. Just really stick with something like a half a lot or a lot or two lots, and take off half a position every time you meet certain take profit targets. Again, I mean, I like to use the previous candle's length as a projected target, and you could use half of that, to really kind of ensure that you're going to have a good success a majority of the time, at least on larger time frames, and cutting in half of your prospective targets as well, and cutting those in half. So if this one was actually like 180 pips, so we could, or 200 pips, so we could have gone in for around about 80 pips, 90 pips there. Alright, we put in some human error buffers in there, taking off 20% of our initial TP target and then using that. Alright, again, I don't really like to put in my stop losses and take profit levels in the trade until it's actually gained a fair amount, and I tend to sort of wake up quite early. I'm actually 3 hours behind Eastern hours, which is a bonus for me, and so my 3 o'clock will be 6 o'clock Eastern hours, so I can basically get up pretty early, see if there's a signal come in, and then just leave my trading station open while I'm watching TV, or browsing on forums or what have you, so give that a go. Alright, and if you have any questions, let me know. Play around with this strategy for like 2 to 3 days. You could come down to lower time frames. I haven't really tested this strategy on lower time frames. You will see a lot more sporadic activity on higher time frames. Here we can see that this one did actually break around about there, and the buy opportunity would have been on the next candle. That's a bit of a resistance there, so I wouldn't have taken that one. That's a bit of a gamble. Yeah, that's just a bit of a gamble anyway, so you might want to sort of really pay close attention to these highs and these lows to see if this is going to be worth your while. That's only like 41 pips. I'm actually looking for, see, that this is a bit of a congestion at the top here. If you were to go for that trade, then I would make sure that this traffic's high was a lot higher. And now what I mean by that, let's just assume that this is the candle prices and it kept on going up. Right, it didn't stop there, and this was the high. If this was my buy signal right here, then I'll calculate what that difference is. And if it's like 100 pips or 80 pips at minimum or something like that, okay, then I would more likely would take that trade on, especially off the 1 hour time frame. Alright, so if there's no traffic to get to that high, I'm more likely to take that buy trade. But this one here, the traffic kind of stopped there, so I've got this congestion to get through. Alright, and there's no guarantee that it will go that high, because we could be in a different series of retracement levels, like on the Fibonacci or the Elliott wave analysis and so forth and so on. Because what tends to happen is that previous highs tend to get met and broke, and there's like 3 consecutive tries when you see the market go up, and then it will come down like an impulse wave. Okay, and then it will stop, go back up again for another little bit, and then it will drop a little bit more, and then start its 5 count again. Okay, 5 count, what I mean by that is like 1, 2, 3, 4, 5, and then on the 5 count it comes down to like A, B, C, or some people label it different. They might actually class these as A, B, C, D, E, and then impulse wave 1, impulse wave 2, impulse wave 3. Alright, so yeah, so that's why I like to have these higher highs much higher, or the lower lows much lower, depending on what side of the trade that I'm wanting to go on. So this is a buy trade opportunity, so this is a higher high right up here, so I'd rather have a higher high, that high, than this high, because it will give me a little bit more worthwhile to, less risk. If there's no traffic in between and it's just like a one clear gap all the way up, then I should have a pretty good success actually reaching that high, or pretty close to it, minus 20% of that projection, if you follow. Alright, so give that a go, see how you get on. Alright, and I'll see you very soon in the next video. Bye for now.